You can avoid the stock market chaos with this simple strategy. One shift can make your portfolio calmer and ultimately end up with greater cash flow that's far more predictable. So, today in this video, we're talking about the stock market chaos while you can still create wealth. If you're tired of volatility, you want greater predictability in your income stream backed by real assets, this strategy might be for you. So, the stock market feels largely unpredictable. I know a lot of people I hear about, they have no control over what's going on in the stock market. You've got the Magnificent Seven raging right now. It's a lot of sentiment driven, a lot of AI driven things that are driving what's taking place there. And it can be an emotional roller coaster. Credit investors look to diversify what it is that they're doing. They still have exposure in the stock market, just not as heavy concentrated as they once did. So what do? They look for alternative things. One of those things is private lending. Private lending is ultimately income backed by predictable returns. It is sitting like a bank in a first mortgage lien position while people just pay you steady returns. And unlike a bank, which gets largely boring dividend type returns, these look more like equity type returns. Now, there's lower volatility. The returns are much steadier than the stock market without that volatility. So you've got debt with equity type performance. There's cash flow differences in this. Ultimately, these are first mortgage positions, people who are typically fixing and flipping a property. Sometimes they're going to remodel it and keep it as a rental property. These can include both residential and commercial properties because there's people doing the exact same thing when it comes to commercial properties, whether it's an industrial property, a multifamily property. There's a whole variety of things out there to lend on. And ultimately, it's suitable for passive investors, people who just want to set it and forget it and just collect that check either monthly or quarterly. And the Midwest arguably can provide steadier returns. Midwest real estate is largely boring compared to the coast or compared to Phoenix, for example, and parts of Florida where you have massive run-ups and then things can trickle down. They can move quite quickly on the downside. Midwest is much steadier than that. Find reliable operators, and you can do it with conservative underwriting, conservative loan to value positions. Now, if you want predictable cash flow, you want less stock market chaos, private lending is a powerful tool. And if you want to learn more, I dropped a link in the description below so you can do that.